Hi everyone, welcome back to the US CPA classes for regulation exam. In this particular video, which is part 3 of US individual taxation applicable adjustment to gross income, we are going to cover the 5 interesting topics. The first will be covering healthcare flexible spending account, illness or injury benefit, interest received on state and municipal bonds, and then life insurance upon death, and then lastly, meal and lodging expense. Let's dive into to understand all such topics and their impact on adjustment to gross impact income.
Health saving account. It is like a checking account. It's like your bank account where you deposit the money and employee can withdraw the money only for the medical expenses.
Okay. Okay.
Right. So these are like special category of account, health saving account. Next is employee contribution up to $3,050 in healthcare flexible spending account. So this is also another you can say health saving account, which is healthcare flexible spending account. So there up to $3,050 an employee can make the contribution. 15th is illness or injury benefit received. So here, like when you are working at office, at that point of time, for any reason you met with any injury, right? When you are working, right? For example, you are going, any taxpayer is going for some professional work or office related work, and unfortunately he or she has met with an accident, right? And there is some injury. So any benefit at that point of time received from the employer is not considered as part of your income, right? Which I think similar to what we have discussed earlier also in one of the point is compensatory and punitive damage, right? So this is about 15th point. Next is interest received on state and municipal obligations, bonds is excluded. So here underline the word state and municipal, right? If there is a federal tax bond, right? So then the interest or dividend is taxable, but only for municipal bond and state bond. Interest is exempt. Clear? Any doubts so far?
No, sir.
Right? So interest received on state or and municipal bond is exempt, but federal bonds is taxable. 17 is lump sum payment received from life insurance upon death of the descendant, right? So if you remember, like when we started this regulation, so I told you like couple of things government or IRS is being very considerate and very supportive, right? One of the situation was, like the death. Second is disability. Third is education. Fourth is, like any medical support, right? So overall law, if you see, they are always be favorable and supportive to such kind of people. Like it may be child, it may be education, it may be medical expense, it may be disability, it may be injury, right? Or it may be, relating to any other, relating to death, right? So if you see 17th point here, lump sum payment received from life insurance company upon death of the descendant. That means if someone has died, right? Any of the family member has died of the taxpayer, and the taxpayer has received any lump sum money from the insurance company who has provided life insurance of the descendant, right? That money is not taxable in the hand of recipient. But from that money, if the recipient is doing any business or generating any interest or dividend income, so that will be taxable. But the money which he or she has inherited will not be taxable. Make sense? Yes, no.
Yes, sir.
Hmm? Next one is meal and lodging in office and for work exclude from employee income. That means when you are working late in office, you are going out for some business work purpose, right? Then if you are taking any meal,